Greetings, market rebels. Welcome to this week's macro measure combined with our sector situation video. It is Friday, November 20th, 2025. Here's the Trustee Market Rebellion disclaimer. Here's the Trustee Market Rebellion intellectual property rights notice. I'm Wayne. We're going to get right into it. We've got, let's see, last week's highlighted main slide. Let's see. So I went with pink just to bring it out again. So we talked about enough fear and damage, possibly bringing the Santa rally. That's really later in the month in December, but a lot of people start talking about it as if it starts now. But whatever the case may be, we talked about that and rally reasons where we had a slide on that. I think I'll review that real quickly. We talked about how the trends were still intact, how you had the Thanksgiving bias, the holiday seasonality that's typically very good. We thought that when you combine CNN and AAII and other things like that, we had overdone selling just as we approach what's typically a very bullish time of year. In another write-up in one of our services, I think I essentially framed that as bears handing bulls their opportunity on a silver platter because right when they really normally want to start moving things up into the end of the year with the end of the year seasonality and so on and so forth, they're being given really good prices. And as we noted, many stocks beneath the surface of the indices were really mangled. I mean, they were just wrecked, is the one way to put it these days. So real carnage in individual names covers that. We also talked about short-term oversoldness here and where are we. We came in thinking there should be a bounce attempt early, and the weekend, if successful, could ultimately clear the runway for the Santa end of year move if the rumbling issues disappear. So those were all backburnered. A lot of those things that were theoretically driving the market lower, at least partially or weighing on it, they all did seem to go back burner. We got tremendous movement to the upside to repair the monthly candle to a great extent in the Qs and in uh, the SPYs. IWM may have been the best performer, though, in terms of the four major index ETFs. I'm not positive on that, but it really did have a heck of a holiday shortened week. We were talking about um, if the SMAs would stop acting as resistance on the way back up, and they did manage to get through a lot of those that were above the action as if they weren't there. And we've seen that before. That used to be a thing, but not very often these days. We talked about the megas and how we went through the one by one reviews, and it was somewhat mixed, but there were some that were really primed, and they continued to really. Most of those continued to go. We talked about the Bears running out of time. And then we said initiate your positions, manage them, and reverse them if necessary, basically to avoid a locked mindset. So those were some of the things we talked about that maybe lent a hand for this week coming in. We talked about this week's back a few times. I believe we've covered this. It was just a really very quickly assembled or hastily assembled case we were making as to why you should start to see a pickup, and if no really serious news hit the tape, and that the trends would remain intact. And so that seems to be some of this stuff seems to be potentially mattering again. We'll see. Here's the sort of update on that, where a lot of the ideas that I put out on the 18th, and this is why you have to keep your head on a swivel and be ready to go. We talked about things like this before really the market bottomed. If you look back on the charts, I think you really could say that the market bottomed on the 20th. And then you came in on the Friday, and they reversed that super ugly Thursday, and then you've been up and away ever since. And so this was probably about two sessions, I want to say, two sessions before the low, and then that was it, right? It's been up and away since. So that's the thing. You can't just because these conditions are there or these things that you note that are important are there, you can't really get carried away with them as if, well, that's enough, right? Let's just buy because, right, what you probably should have waited for was that test of support, which the market did have, the SPY, for example, holding the 100 SMA, which is very widely followed, and then you reverse them there and you go. And that's really just, again, support holding the first time down. A market that gets bombed out. A lot of things are even far worse beneath the surface. You had dismal psychology, pretty dismal level of fear out there. It was extreme fear, as per CNN's kind of cheesy indicator that we cite from time to time. But anyway, that's what you had, and we see what they like to do, and they really did save the candle, as I say. So that's enough review. We're going to go into this week's, and I'm going to try to talk about some things here. This is probably my favorite thing right here, this line right here. I'm going to try to go through scenarios and paths that trying to keep this video shorter than I'd like for it to be, just because there is so much to cover. I want to talk about that stuff because a lot of times we just skip over it, but it's good to remind people, I think, that are new to all this stuff from time to time, certain scenarios and paths that the market or certain a stock can take. And you can be prepared for those if you know which are the most common ones that you typically see or at least see variations of, and then we can go from there. But I'm calling this a very important juncture. I'm also saying, did we go a little too far too fast since reversing last Friday? And then that we're close to being back on track. That's what that acronym stands for, close to being back on track. So we're close to back on track. So that's what I'm getting at there. It's very close. I think it should stay on track. There's always that, yeah, but, right? There's always something out there lurking, but I do think we should stay on track. And I think things are set up really well. I think when we see the charts, that'll come through. So maybe what we'll do is we'll come back to some of this after we look at some of the charts. And so let me just briefly pause and I will move this stuff out of our way. We'll get into the charts so that we're not affected by that stuff there. And we'll come back to this. So let me now. All right, there we go. We have the slide over there. Looks like it moved me back somewhere. Let's see. There we go. Yep, we're good over here. So let me bring up my normal. What I think I'd like to do is bring up my normal main screen, share, screen number 4. There we go. All right, screen 4 should be shared, and that's going to be the charts. And what I think I'm going to do here is try to do this, but what I'd also like to do right here, and just I might mention it again just in case people skip through, but we had a big development happen this week for those of you that have been in Rebel Pit for some time, Rebel Pit Elite. With I chime in occasionally, but just with all the responsibilities we have, mainly Greg and Ryan and my son Pearson and myself trying to help out in there. And we have Greg really holding down the fort most of the day. Greg McDermott. Greg is officially leaving, and he's on his way back to the Philadelphia Stock Exchange. So he's heading back to the floor, and I think he did a great job in Rebel Pit, and we're all sorry to see him go, but we're happy for him because it's a really great opportunity for Greg and his family. And we're just going to wish Greg the very best, like we always do. And just wanted to mention that if you weren't around because of the holiday and you're wondering what's up, but that's certainly big news on any day. But it was just a great thing to develop for Greg, and he's going to be moving forward with it. So, again, happy for him, and I think he's done a great job creating a really good atmosphere and finding a lot of great opportunities over the years in Rebel Pit Elite. And we're all going to do our best to continue on with that, starting really right on Monday. So, there you have it on that part. Now we're back into the charts. And we may as well cover this while we're here right on SPY. And I think the big question is, right, this is really a leap from where we were. Now, granted, we were very oversold, so it's not it's a modern thing, but it's certainly not. So in the modern times, this is typical, somewhat typical. But in days gone by, you really didn't see these kind of near instant reversals all the time. But that's the way that the game has changed. A lot of people call these V's, and so with this. This really did repair that monthly candle, as I've noted. But what it really did too, I think, is maybe has taken the market up a little too far too fast. And that that could be viewed at in a very simple way would be, let's take a look at, say, the 1 hour chart. You have now have a 73 RSI reading roughly on the 1 hour chart. And so you're at 70, I think, on the 2 hour chart on the RSI. So these are not things where I'm in panic mode just because something becomes technically overbought a little bit higher than the threshold that was set for the indicator 50 years ago or whatever the case may be. But you do have to start wondering, right, is that reasonable just to keep going? Or are you probably due for some kind of a pullback before you really go again? And maybe the Bulls got a little too ahead of themselves. You can see this is why these holiday weeks we talk about them. You can see the volume decline there from last Friday all the way through today, and this is really to be expected. And that's why holiday, if someone really has a bone to pick with the market one way or the other as a bull or as a bear, and then on balance, a lot of players really tilt that way. This is a very easy week to pull this off because you're not really fighting against the normal tide in terms of the size. There's a lot of people that just back off. A lot of firms are not doing much during a holiday week like this, and you can see that with how the volume really tailed off there. So I'm not trying to undermine what was accomplished this week. I'm just saying that's part of the game, something we should note of, something we normally do note. And you do get this tremendous move here, and now you're probably a little bit ahead of yourself. I don't think it's anything extraordinary. I don't think that there couldn't be another couple of days where that are bullish, where they literally challenge the all-time high. So before you do have some kind of a pullback, but it wouldn't be out of the question at this point to lean that way. So I do think if you force me to come up with a prediction exactly what happens, again, news neutral, I would think maybe they try to rally on Monday. There's a little faltering on late Monday into Tuesday, and then that gets probably addressed by pulling back to probably this line here, supporting on what was the former resistance to this corrective consolidation that we were in, and that a lot of people are going to call sort of a flag, and that it's very wide for that, but whatever, it's a descending channel, whatever you want to call it. And now, right, you're probably coming back. If you pop a little bit more and come back into there and hold, it'll look like you failed to hold this channel, the larger channel line. That'll give you the kind of concern that people get. Probably holds there, news neutral, and then you start to go again, maybe late Tuesday, Wednesday for most of the week. That would be my expectation if I had to trace out a scenario. But talking about that bullet point or that highlight I made on the chart, I'm sorry, the graphic for in the PowerPoint, that's really what I'm getting at here. This is very hard to predict exactly what path the market's going to take out of the gates next week and exactly what it does. So could you say that there's some resistance just below the highs? If we look here and through some of these candles here, is that the start of a mini flat line forming, the way that we like to refer to them? And that's only a point or so higher from here. It's really nothing in a $685 index or what have you here, or ETF. So yeah, sure, that could be something, but you could see how we cut through all these SMAs like they weren't there. So that was minimal resistance. Even there was only hesitation really at the 50, and they just blew through virtually everything after that. So I could see a little hesitation there. Remember, there's a lot of things. So here's what this would be one scenario. One scenario is the perfect double top. You work your way right up to here, walk up there, whatever the case may be, slowly get up there. You can't push through, you back off and fail. There's also the false breakout scenario. You take it a little bit higher, we make a new all-time high. Everybody's doing the old see, I told you there was nothing to worry about routine that they typically do. And then they rug pull that, okay, because there really is something brewing somewhere out there. And they were able just to do this during a holiday week on low volume with not a lot of players present. That's another scenario. These are not predictions. I'm just running through them. Then there would be, right, the one we already discussed where maybe you go up a little bit higher, you look like you hesitate here, you pull back briefly to take some of the short-term overboughtness out of this market, scare folks a little bit that are starting to get bullish again. Maybe they get shaken out, and then you start to lift back up again. You get back into this channel. I think it's really impressive that they were able to get back into the channel. We've been charting for months and months and months, going back to, I guess, really sometime in the spring. So the fact that you made it back up into there, losing the channel, that became problematic. Remember, we talked about that. That's what probably helped technically add to the problems the market was having, in my opinion, anyway, to push it down to the 100. But as we said, first time to the 100, bombed out conditions, right? You probably hold the first time and they make a relief rally attempt. And the relief rally attempt was very impressive and worked. Another scenario would be that we just hesitate right here and you come back further to an SMA and that you start because you did get too far ahead of yourself maybe in the short run. And then people are really wondering, well, what's going on with this market? I thought we were on our way. And you find support near, right, all of this gaglione of the 10, the 15, the 20, the 50, and so on and so forth. That would be really another scenario that you could be working with. Now, this line here, yeah, I'm not sure what that one is. I might have added something by mistake. But anyway, that's another scenario. Of course, you have another scenario which would be the full failure, where this was really saving the month and creating a squeeze when they could, and then it gets rug pulled quickly because let's say something like crypto and some of the risk on aspects roll over. So these are just some scenarios, and we left out the where they just break things out. They go a little further, maybe towards, let's call it 700, fail there, come back to the former high, touch it, and then go. Right. So that's all these common paths that you could trace out that we have to be ready for. And that's why I'm telling you to be nimble all the time, keep your head on a swivel. You don't want to be locked into thinking this is what it has to do, this is what it should do, right? It's going to do what it's going to do, and our job is to really just to stick and move with it as best we can. And sometimes, right, it just doesn't work out exactly the way you think it will, but sometimes it does. So an example would be for me this week, I said, right, that I'll talk about it later, I think, if we have time, but I said, right, I would start adding some longs, and I did in certain tech and some crypto that was really beaten up. And it was fortunate for the kind of holiday week that we had to have a good week. And one thing I looked at was we had some paper happening, occurring here in the mining space. And so this was a nice sort of double bottom that was set up in here. And I saw a lot of this paper hit, and I said, wow, this is really a very impressive pullback in terms of this is really a great opportunity if you still believe in the long metals situation. And I think the long metal situation still has an uptrend. You can see even CDE has uptrends really still intact in the long term moving averages. And so with this and this reversal, I decided to add to this. I was neutral on this one. I still held other ones to a degree, but I got aggressive in this one quickly and went pretty deep in the money and actually rolled up here today, somewhere around 1720 or something like that. I rolled I think, like 90 delta calls at that point or whatever they were to more like 60 delta calls or whatever. I still think there's upside potential, but just in case they have a little pullback, I didn't want to give so much back with the heavy deltas I was carrying with all the calls that I had. But we got to this spot. Like, my thoughts were right that this if this did take off and work, it would probably get to the 50 this week, potentially, maybe next week. And then that would be an area where it gets a little more interesting because will it respect that and then fail, or will it overtake it and go? And I just thought it could respect it. The 50s often respected. It even got respected here on the way down. So I waited really in this case till it got near my target, just under it, and then I made my adjustments. And those were my expectations. So that's the thing. You can have expectations, and sometimes it is going to work out fairly closely to what you expect it to. But we all know that that's not always the case. It's great when it does, and it's great. And the reason why I thought that was because once I cleared the 20 in light blue, I thought it would be there wasn't really a lot of resistance in the way I was looking at it on its way up. So I thought if it went, it would go. And like I said, fortunately, it did. So it was really a nice little setup with a this is slightly lower low here, but really a double bottom and really nice retracement. And it was really a great, I thought it was just a great easy setup, really one of the easier setups that was around, especially in a space where I was looking to add stuff. But we had SLV, and I believe the Silver Future really made a new all-time high. I believe this is a new all-time high in this ETF as well. So you can see that they really came after that. Gold, not as much, still a pretty good week, but SLV or the silver area was really a big strong point. Now, one thing I did want to try to cover, if I can, is some of these things that I've been talking about in this video, and I think I mentioned these, so I'm going to go back to you just to go back to these just to show you the timing on some of these players. So I believe it was on, let's see here. Let me get us to 11, I think it was 11:10 that we got some EOA that I put a hit on. I'm sorry, I put an idea on in here. And the idea was good until I think the 21st. And this is the thing, right? They caught this nice little pop here, and that was it for that. It was a nice little early pop. I know some players traded it, but right smartly when it got back to resistance, they saw it hesitating. They took what they could because it wasn't getting to the high, it wasn't pushing through the high, and they were smart to take the money. They brought it back again, and then really popped it here. And so this is why, right, trading, even when you've got a really good signal, I mean, big buyers showing up, and I think I've mentioned that there's been more and more buyers coming in, and I believe it's this tab. But we've had uh, many updates since this idea went out on 11:10. So they continue. That's the sign we're looking for, is that they're continuing to buy calls uh, in the name, and if the name is and along with the name cooperating, right? That's really what we want to see. And I think I mentioned these a couple megas, and on the same day they came in for Google. At the time, Google, when I got my hands on it, Google was near 286 when they came in and did this Google call buying here. And let's see if we can cover that one. So that will also be 11:10. And that would fall where? Let's see. 11:10's right about here. Right? So again, if there was there something to it? Yes. But did you have to manage the trade? Yes. Right? That's the whole thing. I don't remember if this even triggered that day. It might have triggered and then reversed on people initially. And that's why this is another thing that I harp on. That's why I'm doing this, because it doesn't always just instantly go. Sometimes they do, sometimes they don't. And sometimes your scenarios or paths do work out, as we saw with CDE. That was what I thought was most likely, and it worked. It doesn't always work that way, as I said. So you've got to be able to be willing to say, I'm not wrong. Uh, I'm not right. I just know there's a strong possibility based on the trend, based on the current technicals, based on the UOA, based on the data that I'm getting in terms of what Ryan's uncovering in webinars. I'm so sorry, sharing in webinars with respect to silver delivery and so on and so forth, and silver prices in other countries and how that's varying from here, and how the suppression of silver prices might be really in trouble. It's been there for decades and decades and decades. But still, even with all that, you have to manage the trade. And that's why we say if it tries to break out, fails, and can't hold our trigger, we have to either neutralize or get out. Right. And then what you do is you keep an eye on it. If you know there's persistent activity, especially, keep an eye on it, keep setting your triggers. When it starts to act better, technically, again, you've got to go back in or unhedge. This is why this game is hard, because even if you're right, which you were ultimately, right, you were right about Google. You either had to hang on through some hairy stuff, even after it looked good initially, or you had to be really patient and wait to enter a second time up here, right? Just kind of neutralize or get out and then go again. So this is what happens in the real world of trading, where um, it doesn't always instantly work, and you can be right. And this is why it's frustrating. And that's why I keep saying if the breakout attempt doesn't work, don't look at it like you were wrong to do it. It's just not the right time. It's just there's no way to know for sure if that's when you could say, well, what if I stacked that the market was running and peer stocks were running, aka the sector was running. The space was doing well. There was good upgrades out. This, that. Yes, yes, yes. It just doesn't, it might not matter in any one particular issue that isn't being mentioned. In other words, stock specific upgrades. It might be that the company differs slightly in how they operate or their forward guidance or expectations from the street. So you've got to just be able to take this nimble mindset into trading and do the best you can with it. But if you get into something, it doesn't work, you get out, or worse, you don't get out, you have a bigger loss, and then you quit on it, and you're frustrated, and then it goes like that's really right. That's super frustrating at that point. And the final one, just as an example, is Meta in terms of the timing. And the Meta, they came in for Meta on the 19th. I'm sorry. Yeah, it actually was the 19th. Okay, so let's check out Meta on 11/19. And that would be what day is that? That's right there. So literally, this is the perfect thing that you're looking for, where they come in, they show up, the idea gets put in play, and they basically, this is, I think, right as the market was bottoming, they came in, or right, maybe the day before the market was bottoming, they came in and said Meta's bottoming, and they came in and bought, and then you got this really nice move as a result. And there was almost no problems to this other than the depending on what day we triggered, and I didn't even note that, but depending on what day we triggered, that could have been your issue. So I thought there wasn't one, but let's see if there was. So the trigger was 595.33. So let's see what day it closed above 595.33. It got above it on that day, but could not close above it. So hit the 10-day right there that was declining in white, and then it got sent packing again. Here, it finally closed above 593 right there. So you would have, again, even with this being a really great opportunity, you would have had to have short-term management, potentially just say, all right, I'm getting back out. It tried to run, it couldn't. It's coming back to my trigger. I'm just going to get out for break even or whatever the case may be, or I'm going to hedge. Right. Then you got to wait to see how it acts and if it can hold above there and go, hold above there and go. And again, what's the difference between this, right, and this? On this day, the market was probably still getting, on this day, the market was probably still getting whacked. I think a day in the market, and I could be wrong about that, but I'm not positive on that. But let me see if that's 11/20 right there. Yeah, let me double check it on the market. Yeah, that is the day the market was getting whacked. So that this, of course, really struggled because the market overall was really taking a beating that day. Market bottoms, stock triggers. Market's been up and away since. The stock has practically been up and away since. So that's some of the things you're looking for. People want to know about management. I see it all the time. The questions come in. Well, what should I do? What should I have done? What can I do next time? All good questions if you're trying to learn all this stuff. And I just wanted to spend some time on how many different paths there are that are fairly common and why you need to be a dynamic manager and not to turn this into something about me and all that. But I was talking to my son earlier today and he came home for the holiday and he had some positions in CDE as well. And I told him about how when I got into it, I forget exactly the day I got into it, but it might have been back in here. I can't recall when I first started adding some of it, and then I added more of it. But I got into some of it, I think, at some point, and it just might have been here. Actually, it might have been here, and it just struggled. It just wasn't doing anything. And then the next day, it kind of opened, had a lower high, and then started to work its way lower back to the 100. I just said, you know what? They might be going for a little flush out move here. I'm going to hedge my deltas, which I did. So I hedged this. I had a diagonal on, and it became sort of almost a calendar, but because to neutralize delta. But I was able to get fortunate where when this thing really dipped down, I was able to close out my short calls. So I was initially down money on that first entry. I closed out my short calls, took all the money I collected on those, and then put that into additional calls, and then just became naked long, far more calls than I originally had gotten into. But and then what did I do since then? Nothing until it made it to my target. So that's what I mean about adjusting where, okay, my timing looked good. It looked like after 3 days this was going to try to lift, but it didn't. And so once I noticed it not acting the way I thought it should and starting to go back towards the 100, I did something about it. And then I undid that and then it ran. This is what I mean. And I don't want to make this seem like it's easy. I really don't. I'm just saying that I don't think about the I don't think about the adjustments that I make in terms of, oh, this is going to ring up my bill in terms of commissions or something along those lines. Just do what you think is right under the circumstances and then undo it or redo it or whatever the case may be. You just don't know what's coming your way for sure. So you just have to have plans in place as to what can I do if this entry doesn't work out, because let's face it, not every entry works out, right? So it really is important to do this and stop thinking that every entry is going to work. Have a plan in place for if they don't, that you can execute. Buy yourself some time. This is what I think is a big separator that helps out a lot, where professional traders are going to play defense. Even if they still like something, they're either going to get out and get back in, or they're going to play defense until if they still believe in it, and then they're going to then get aggressive again at some point. So I just wanted to mention that because some of these things we don't get to cover and talk about all the time. So let's get back to the market, and I'll start back at SPY. And for SPY, I think everyone can see the story, and that is right. You're back in the channel, as we said. You're above this declining channel, this corrective action we were in. Now it's where the hard work starts, though. Can you hold up here? I mean, I think as long as it holds above here, it's going to be fine. Now, of course, if you get more backup, the next area you look towards would be the 20 here in light blue, which is near 673, and then the 50 beyond that. And that really wouldn't be out of the question given the verticalness and how short term we became short term overbought quickly. I don't think without news that it's going to pull back that far though. My take on it would be a more shallow pullback, and that likely would happen towards the in the first half of the week and set up better for a better finish on the second half of the week without news. Again, news neutral, because you just don't know with Trump. I think Trump is just a newsmaker, and he could he could make big news over the weekend. It could change everything. That's why being trying to act as if it's very hard to act as if you know exactly what's going to happen, because you're not privy to a lot of things that some people are privy to. But anyway, here's the cues, and it's obviously all very similar. That's why I'm not really belaboring the finer points if we even go into, even though we do kind of like common sense nuts and bolts everyday charting, nothing fancy. Still, right? I'm just going to keep it very simple because you're back above all your SMAs. You had this great week right here. You're at 71 on your hourly. So are you a little overdone? Yes, but I feel like the way that things shifted, that this should be on really good footing. And I think I put that into our write up, and I think I said um, that we saw great improvements in sectors and breadth. So let's jump to that now. We'll come back for IWM and the diamonds, but here's why I'm saying that. Okay, here's your advanced decline line and advanced decline line cumulative average. Look at in this subgraph, look at all of your number of stocks above their respective SMAs, the 50, the 100, 200, massive jump, right? From really near some of the most recent lowest lows. Here's your cumulative volume index on the NYSE. That's back towards the highs. So they really went into this almost all week was effectively looks like buying. Here's your McClellan oscillator. It just jammed. No surprise with the kind of other things we've already looked at on this screen. And they really turned the McClellan summation. And I don't think it'll let me do this, although I would like to. But this to me is on the verge of well, they won't let me do it, unfortunately. But this is really on the verge of a trend break. I was trying to put a line there. Sometimes I've been able to do that, and other times I haven't. But if I could, I would. I don't know if it'll let me. Is there anything I can use to do that? Well, maybe it'll let me. Will let me annotate, but you get the idea. It should be oops, something like this, right here. So that trend of that is trying to really break here, potentially and go. So I just want to hopefully that'll disappear. I don't use that very often because I seem to always have it give me a hard time, and it is giving me a hard time in removing it. Um, okay, well, I'll just have to deal with that, not letting me do it. Well, we'll get back to this anyway, so no big deal. I'll go back to my other stuff here. And let me just get my normal pointer going. So that's that. I might have to live with this annotation now, but you could see your advanced decliners, right, on the NYSE and new highs, new lows. Everything's really the normalized new highs, new lows, those really picked up and shifted. So there's really something significant that happened here. And after staring into the abyss, the sectors last week, that's what we were kind of describing it as, you can see how powerful this was in so many places. I mean, this was just a complete reversal in many cases, right? So we've seen this many times where they had to step in, as we said, the bulls were given the opportunity that excuse me that they wanted, they usually want to run stocks from sort of like Thanksgiving for most of the rest of the year, typically, and they took advantage of it. That was the silver platter. And you can see all these sectors and how they really, really went from looking concerning and near concerning areas to reversing. So, is it a little too far too fast when you see things like this? Yeah, probably. That's what I'm saying. I think there's a little bit of that too far too fast. Maybe the improvements were too great too soon. Not that it's doomsday material at all, though. I think it's fine, and I do think it could continue to go. I wouldn't rule that out at all. It's just that let me see if I can do the eraser here. If I double click on that, no, there it is. Get rid of that stuff, and then get rid of the drawing stuff. So, so that's where I'm at. That's where I'm coming from. I just think it's if anything, you're probably news neutral. No big Trump stuff happens. Nothing breaks anywhere. I just think you get a mild retracement in most cases. If anything, brief pause, mild retracement of what we did. It finds a bid again, and you start looking better. I still think the bull market's intact. You did not break the trend. You broke this channel, but you did not break these upsloping SMAs that a lot of people like to key off of for the trend, especially the 200. You didn't even get to it. So here's the massive reversal in the IWM. This is what I call a bearish dynamic, where there were the bears were cycling. Here, the bears were in control, so sort of like a bearish cycle. And then after that, you get this end to it. Now all they really need to do is kind of, I think, pull back, build on this, maybe come back to the 50 right there in gold near 243. At worst case, I'd like to see him come back to where the former resistance line is, which is where the 20 is, and that's at 240, 50-ish. And if they do pull back, and that's it, you pull back, you put in a higher low. You have this really strong surge here. You put in a higher low, and I think they try to go again under most normal end of the year December seasonality conditions. The diamonds really repaired themselves significantly, right? You're really not very far. Again, much like the SPY, you're good one good day or so from the all-time highs. So I think you have to be impressed by what happened this week, even despite the fact that it was a holiday week. And Nvidia, of course, was one of the megas that did not really get a lot done. A lot of the other ones we looked at last week did. The ones that looked good generally went up. Some of the ones that didn't look that great, even some of those went up. Nvidia wasn't one of them, but SMH itself, though, had a very good week. So a critical part of the mix, right? Something I'm always keeping my eye on. I think it's hard not to. That really, how can you really complain about, textbook touch and reversal last Friday of the 100, and then you're basically up and awaying it ever since. Now you're back above all the SMAs again. They are leveling off the shorties. The 10 is even already upsloping with today's close. So every SMA will probably, with a little bit more bullish action, will probably be positively sloped again for people that like to follow that. And there's a lot of people that do. That's why I mention it. Again, not my cup of tea typically, but it is what it is. A lot of people like to look at that stuff. So that stuff is pretty hard to ignore with all not only the 12 S&P sectors we covered, the SMH doing what it's doing. Apple was a little bit of a disappointment. I thought Apple was going to do a little bit better. Started out, had a good close overall, but did not power through that resistance line, as you can see right there. I think the odds favor it still trying to do that. I don't see any really big problems in there other than it was didn't have the follow through. We had an idea in there. It was just okay. Amazon, though, this one we had an idea in. This one did well to move up. We thought this one last time we saw the reversal from there. This is one that we were like, last Friday. Oh, I don't know. Had a nice reversal on the 200, but they took that up from there. I think we talked about Google still looking good. Again, we had the idea in there that did perform. And I think we talked about Meta having the idea in there. No, well, maybe we didn't. I can't remember. I think we did, but I can't remember exactly on that one. But yeah, I mean, that one lifted after being really stretched to the downside. That was part of the appeal of it, was that it was really stretched below the lower Bollinger. Had already gotten like sort of pre-whacked in front of the markets sell off, so it was already down there, almost kind of like waiting to try to rejoin, and it did. Um, the Microsoft, which did not look good, they even found a way to lift that. It was not working well until the last two sessions or 1.5 sessions, and they lifted that. The aforementioned Nvidia, right? This is what struggled, but again, the SMH did not. The SMH kind of said, "All right, Nvidia, if you want to be a sourpuss, go right ahead. We're going to rally anyway," and it did without it. And just this was all done without Nvidia really joining the parties of the larger index ETFs and the sector ETF we talked about. So really, you had a lot of things working. Netflix, which we said was not looking too good, still managed to rebound. So a lot of these things have tons of potential to start going again and getting off the mat still. So that is another argument that I would make that, right, they did move some of these up nicely and those big weights really help, but there's plenty more sort of discounted big dog stocks that they could still come after to move this stuff up. And I may have skipped Tesla, but the Tesla one that also popped decently here back to the 50, and that's the last SMA there. If that goes right, then it should start working, try to work higher. Tesla, though, has become a tough one to trade. I don't think it's that easy to trade that name all the time. It's a little bit more squirrely, I think, than some of those other names that I think are a little easier. But that's the end of the bears right there on Thursday. Getting above there, holding, and not they tack onto there. Now you get it back above the 50, and really the bulls should be very close to resuming control of that. And your LTs, in other words, your long-term SMAs, are all upsloping as well. So that should also bode well for that if the seasonality effect of the market holds out nicely. Uh, I did some trading, as I mentioned, in crypto. I bought a bunch of beaten down names. Bitcoin did make a comeback there. So you could see from the lows of last Friday to the highs of today, you had a nice rebound there. We switched over to percentages here. I'll try to get it off of that. And that's kind of one of the barometers for risk on, risk off. So that kind of went risk on. There was a couple, I think we had a coin idea and other ones. I was not in coin. I wanted to get in coin, couldn't get in time, and I bought my main one that I went through I went to Mara and Riot too, but this was the standout. You can see this really had a great week. So I closed this out for now on just on overboughtness, and I'm going to start keep this and some of the other ones on my radar. Um, and I want to see them continue to act well, and I'll get back in. But I felt like a lot of them jumped so much so quickly that I really wanted to. Now, granted, they were very oversold, so I thought that's why they were good. They had good setups, I thought, and that's why I thought they were worth that kind of rebound trade. But I kind of feel like with the market getting ahead of itself and crypto doing what it did, I wouldn't mind. I could be wrong, but I wouldn't mind a little bit more of a pullback here and then higher low to really add to it in a bigger way and play it again. So that's kind of what I'm looking for on those. But again, you just never can tell on the path, and there'll be plenty of other things to get into if if I can't get into those, I'll find other things to get into. We talked about, let's see, we talked about the paths. We talked about the hard work that remains. So that's the thing. I said, bulls, brief pullback. Let's see. We feels yeah feels and looks much better. We covered that. Seasonality is there. We're very close on the charts. We just need to hold above key levels or drop below them and then retake them. We may be short term overbought. May need a pause or a brief pullback. Uh, but the scenario for bulls is really there for them to do their thing. So the seasonality is right there. Um, and as I said, I called it a silver platter. But they made the decision to go in there and gobble up stocks, and they didn't wobble. They really torqued it really to the end of the week. So got the hard work we talked about. We talked about those paths that we skip over a lot. I just kind of casually mentioned them, but I wanted people that are newer to understand how many paths of reasonable paths and common paths there are as to why you need to stick and move with this market and not just get caught holding the bag, as they say, when a breakout doesn't work or they throw you a little bit of a curveball because they almost always do that. But I think you're back on the bull side where, and I'm repeating that caveat, that you do need to reclaim and hold. And I do note that for the reason, but the market's temperament clearly changed when you look at the charts again. We said this before a few weeks ago that the bears really, it was more of a bear temperament change, and it certainly changed to back to the bull side. So that's that. But again, you need to hold here and not give too much back. And if you do that and then start going again, I think you should be in good shape. In most cases, you'll be in good shape for December, typically speaking. So great improvements as we saw, allows December to proceed. We talked about all these things already. I would just mention maybe you should keep an eye on quantum. If the market continues to work, maybe go look at the Ion Q, the Rigetti, other things like that. Just that whole space because they're slow really to get off the mat right now. But if they keep pulling everything else up and the risk appetite really comes back, then they're pretty, some of them are beaten down from where they were. And even if they are hype, I still think they're in the hype phase where the hype phase could pay off. It could, and so it's worth it to me to keep taking a look at those. Most likely scenario we talked about is pause or pullback, then trend resumption. That's just where we are. So I just think only really negative news is or developments that are going to it's going to take that to knock this off. Bottom line, because the trends are still up, still too far too fast. Should bode well. Other that's where we're at. Pretty much similar. Um, the risks are there, but they're back on ignore. And we what we do is we try to look for when the market starts paying attention to them. And we thought that the market started doing that a few weeks ago, and now right after it got bombed out, we thought probably they try to lift during this big holiday week. They did. They may have lifted too far. We'll see. But until you start seeing things not act the way they should, that's the sign that or one way to think about it. If something's sort of not acting the way it should, and you're thinking, why are things so heavy? That's maybe the market paying attention to something that's been subsurface that it's ignored for a long time. So the gang saved the month, textbook style, perfectly timely manner, and they really should have. It was, as I said, it was there on the silver platter. So they did exactly what you would expect them to do, exactly when they needed to do it. And it was handed to them by Bears, and the Bears could not crack the trend. So that's the seasonality reminder. The bestiness could be behind us, but with a really good week this week. The Bears did do decent damage, but the trend was preserved. So it should be the bull cycle time, and then we have the customary be nimble reminders, and be ready if you start seeing things creep back in. You've got to be ready with your smart moves that you can make as a hedge on your portfolio. But I wouldn't really be at a high def con at this point. I would raise that if we don't hold at the levels that we discussed. But otherwise, I think you're there. Even the dollar started peeling back off. Yields started rolling over to a degree. So we'll take a look at those first. But yields back down again on the 10 year. And then you had the dollar is dollar DXY on this platform. And the dollar, you could see that backed off from a key level where if it could have broken through here, that's pretty big. So for now, at least it did. And so probably not something you want to see. And as we said, the dollar goes up. That usually is not a good thing in terms of the dollar rising. Market tends to struggle. The dollar's backing off, market coming down now. So you get that idea, get the same idea there. Anyway, the other thing I wanted to mention was the VIX. And this is one thing that I regret because I was very close to cranking the VIX here. In other words, selling out my VIX call spread that I got back into, and then definitely thought about doing it here on Monday. I did, or is that Monday? Yeah, that was Monday. But I decided just to leave it on as a hedge in the end and just add maybe a little more than I planned to in certain things, which fortunately worked out. But that really would have been this cherry on top because I could have sold this here, up in here for a nice little gain, which would have been really perfect timing, but left me completely unhedged. And I wasn't confident enough yet to do that, so I just gave it more time and just said I'll add bigger if the scenario we expect for the week starts to play out, and that's what I did. So just some thoughts I wanted to share because maybe these kind of things help you. Sometimes when I think these subsurface things are kind of percolating a little bit more and it's becoming concerning and the time of the year is conducive to that type of thing the way it is often in February and sometimes into November. I will feel better about going long certain things at the right time if I've got that uh, hedge on in the VIX or in some other way, usually with downside put butterflies or something like that. So worked out really well overall, but could have worked out even better if I had just been really aggressive about it at the right time. And I think I'm trying to think if there's anything else. There was one other thing I wanted to mention, um, but I think oh yeah, that's what it was. We did. I kind of glossed over it, but I don't mean to do that, but this is really very interesting to me. There's two things that are very interesting that happened this week, which is kind of bodes well because this was looking really bad, and you got this XTN. So the transports last week were looking dismal, and that was a real clear out move, flush out maneuver, and they really have taken these right back. And if this can break through and leave this consolidation bullishly, that to me is a really good sign. Maybe it would look better if we showed this on a weekly chart, just how penned in this has been for a while now here this year. So if this turns out to be a consolidation and we can start to go here, then that's going to be really a great that will be a great start of things to see that this is really picking up and maybe attacking that high back there at 24. And it's been a while since it was not a big mover, but it's been a while since it was in the neighborhood of even doing that. So that would be a really good development. And then the IWM, which we had, but it leaving this consolidation with potentially a higher low in place, with rates coming down and so on and so forth. This is really potentially very hopeful to me. So, this thing, the way it can power, this could be there very easily next week. So don't forget about this one. We talked about this long-term potential for a while, given how much it lags. So there could be some really good opportunity. That's a very powerful candle there this week. Kind of tells you what's up. And then just looking at the daily candles too, just relentless, right? Just rates sliding off, and this happening. So those are some really good signs that I did not want to forget about those two areas that we tend to look at. XLF and XLE both also had decent weeks, which is a good sign. So it's all coming together. I think all we need to do is just not give back too much and not have any of these subsurface things become front page. And if we hold on in this vicinity with just a little bit of give back, with then put a higher low in soon and then start going again, I think that would really bode well. So on that note, I'm going to wrap it up. I'm going to say that I hope everyone had a wonderful, safe, healthy Thanksgiving. I hope everyone has a great post-Thanksgiving weekend, and just getting a little wiped out myself from everything. And so I'm going to wrap up. But thanks for tuning in. I hope something that I shared with you during this video helps you out this upcoming week or some week in the future. Everyone take care. And again, final reminder for everybody, and best wishes to our good friend Greg, who is moving on from Rebel Pit because he's got a great opportunity to head back to the Philly floor where we all spent so many years as options market makers and specialists and stuff like that. So we're all happy for Greg, and we wish him well, and everyone wants to thank him for the great work that he did in Rebel Pit over the years, finding great ideas and really creating a very nice environment in there for asking questions and sharing ideas and takes on certain things, and good camaraderie. And Greg's entertaining and funny. So everything worked out well. So there you have it. Don't want anyone to kind of show up Monday if you do watch the video and say, "What happened to Greg?" So, yeah, best of luck to Greg, and everyone take care. Thank you.